The Federal Reserve has expanded their balance sheet beyond anyone's wildest imagination. Even the members of the Fed themselves were probably wondering how much more this system can handle. But it seems as though you can buy unlimited amounts of garbage with no consequence. As long as you calculate certain statistics like inflation incorrectly, you can keep inflation low. A 2% target that never gets hit should always be followed up with more QE, right? You came here for the truth, so let me unveil that for you. Isn't that interesting? As long as you're calculating the way that they do with the core PCE fake inflation rate, they're never going to hit 2%. So as a result, they can justify their actions. Doesn't that just make you upset? It fires me up like you have no idea. The Federal Reserve is my favorite topic, and I don't care how many subscribers I gotta lose, but I'm going to show you all the detail you need to know related to them and how they connect in with all of these different indicators and the economic aspects that are present today. They are the absolute center, the focus of what I do, and I know it's important to you as my subscriber, so I will continue. Now, what we're going to look at here is what the Federal Reserve had to say. This meeting minutes that I will provide you the exact source had some information I wanted to share. I'll give you the mainstream view and then I'll give you the actual source itself. And then we're going to look at some other facts here. No more wasting time. Let's go. Quick update on the balance sheet. You could see that it has grown as expected. Nothing's new here. Just moving beyond the 7.2 trillion. I can't even believe that. When I was about to say it there, I kind of stuttered because it's almost unbelievable, but here we are, 7.2 trillion. They went from 3.5 trillion approximately back in 2019, and over the last year they've doubled their balance sheet. Nobody's freaked out about it. I find that extremely weird. Anyway, moving up here, they vary depending on the week, depending on the actions that they're doing, and I've shown you many times how to see every single one of their activities that they make public. Remember that they make public, and you can see here that they're just going higher and higher with the amount of mortgage-backed securities as well as the treasuries that they've been buying, and they plan on doing some more. As economy struggles, Fed weighs boosting bond purchases. So your friend and mine, Jerome Powell, had a few things to say, and you'll see what the FOMC meeting minutes revealed. Fed weight adjusting bond purchases to provide more help to economy, quote, fairly soon. You could see here, if you want, from the CNBC article where they put it in fancy language for you, try to get rid of some of the key points, but I will show you directly from the source. Here, in addition to the interest rate and bond buying decisions, members expressed concern about the pace of economic growth, and that was part of it. Look, we need to help out, we need to do our actions, we need to make sure that the system is running smoothly. They say in here, I read through it, at least as it relates to the interest rates as well as the purchases, that they believe the financial system itself has recovered, not necessarily the economy. And when you say financial system, I think really what they're talking about are the stock markets in the US, and it just shows you that these two are quite at opposite ends today, and I will show you some of the other opposites. But first, I wanted to give you the information directly from the source. If you are new to the Money GPS, you got to know that you must demand that I, as well as all of the other people putting out information, whether it's mainstream or fake alternative, this is important to provide the actual source and then document it. Put a link somewhere, provide that for the public, because we all need to be accountable. Anyway, looking right here in this paragraph directly from federalreserve.gov, they get into what the committee wanted and what the committee was looking at, and some participants said this and that, but you can see here that largely, they were all loving their programs. Nobody's really saying that they shouldn't do it. However, right at the bottom somewhere here, that just shows you several participants noted that the possibility that there may be limits to the amount of additional accommodation that could be provided through increases in the Federal Reserve's asset holdings in light of the low level of longer-term yields. And they expressed concerns that a significant expansion in asset holdings could have unintended consequences. Isn't that interesting here? The longer term yields, the assumption at this point is that they will change in what they're buying specifically. So they might do a little operation twist action, might start buying different types of bonds instead of holding shorter dated ones, hold longer dated ones. There's also speculation that we might see a little bit of not YMCA, but the YCC, yield curve control. Okay, so that might be a potential. Other central banks do that as well. But here is really the key, that they don't want the unintended consequences. And when you expand the balance sheet rapidly, you have what already exists today, and that is mass speculation in the markets. Could those unintended consequences be showing up in some of the indicators? Oh, I don't know. Why don't we look at the S&P price to sales ratio at a record high? Never seen anything like this before, not even close. Even in the ridiculous, absolutely ridiculous tech bubble, the tech bubble is made to look like nothing in comparison to where we are today. Imagine where it will eventually end up. I keep seeing the comments all the time. The stock market will never go down. It will never fall. Well, we'll see about that. I don't know what's going to happen. I don't know. So I can't tell you, but I can tell you when things are out of whack. I can show you the different indicators, and you do what you want with that information. Everybody seems to know what's going to happen. I'm just providing you the information and saying, hey, doesn't that look completely messed up? How about the unintended consequences of actual food inflation? What about the unintended consequences of your energy rising, of your student loans, and the student tuition, and basically everything today going up for the most part, at least as you see it in a general theme. And there are always going to be people that say, you know what, well, there's a reason why. There was a supply chain disruption, and that's what happened. Oh, no, there's another reason why that went up. And there's always excuses. There's always excuses. Always going to be excuses, but there is never going to be a large group of people who wake up to the criminality of the actions of the Federal Reserve. And largely they know that the Federal Reserve is pumping up their 401k and their Robinhood account, and they are satisfied and they are elated by it. Thanksgiving dinner costs up 9.8% in 2020. So using their rate, which I don't know how the actual calculation comes to be, but regardless, it's about 10% above last year. Now that is extreme when you see it. Now they're just showing you, they do break it down somewhat here if you want to take a look at it. And it depends on where you are. You could be in one city and be in another city, and it's two completely different numbers, but they're just showing you that the inflation has picked up as you see it here. And it's just a great indicator to look at over the course of not just 1 year over year, but to see it every year. I believe I did the same thing last year as well. And it just shows you that the numbers that they give us from the Federal Reserve are completely fraudulent. Look at what's happening with the personal savings rate. As the crisis of 2020 was taking place, people were not spending. There was a lot happening here, as well as the stimulus coming in. So people just got this paycheck, and they now are running out of that money, and you could see it coming back down to earth. I was supposed to show you this in the previous video, but this is the US financial conditions right now, easier than they have ever been. This chart goes back all the way from the beginning of the 90s up until today, and it doesn't surprise me. I know it doesn't surprise you, and we will have to see what happens in the near future. IBM planning 10,000 job cuts in Europe ahead of unit sale. We'll see what happens. They're basically just trying to highlight here the UK and Germany are set to be the most impacted regions. I think that this is important because you look at all of these different big businesses, whether they are technology companies, as they say here, Big Blue focuses on hybrid cloud computing and AI businesses, and they're essentially just showing you their slow growth services unit, and they're not really seeing growth there. I guess that's what they're trying to suggest. We will see what happens as more and more companies go towards this type of business where they're cloud computing, AI, and so on. And a lot of the other jobs are just getting displaced, eliminated, reduced, and so on. Deutsche Bank weighs move to 2 days a week remote working, and this just shows you up here. Plans across European banks vary from 20% to 50% work from home. I show you this because it relates to the commercial real estate. If you don't need as much real estate, by the way, what a lot of the banks are doing, and I'll show you an example in just a second here, but what a lot of the banks are doing is basically that they do not have a seat for people anymore. So you show up and you go into a pod, and you will, at least this is how it worked prior to 2020, you would show up to a pod, you sign into that pod for a day, and you do not have any personal effects on your desk, and you sign out at the end of the day, and that's it. You cannot keep anything there. There is no space for you personally because you're not going to be there the next day. And this is happening to all the big banks. You know, all the big towers employ so many different people in the city centers. I don't think some people understand this because they maybe don't work in the industry. They don't do anything in the middle of the city, so they're not aware, but understand where the jobs are, where thousands and thousands of people work in a single building, and then try to dissect what's going to happen as a result for the businesses that are involved. I show you this information because then you can do what you want with it. I cannot give financial advice, but you got to understand where the weaknesses are as a result of something like this. Airlines set to lose $157 billion, and that's not a good thing for the industry. You can see how it is affecting so many different jobs. I don't have more to add to this. Just wanted to show you, give you some updates on the sector in particular. Hollywood grapples with mass layoffs as the biz redefines itself for streaming future. I do believe that this will put additional pressure on the government as a result, because they're going to be seeking unemployment benefits, and you will see the unemployment rate, the real unemployment rate, rising, not the fake one that they show you as the U3. Weekly jobless claims ticked up for the second week in a row to 778,000. That's more than the 733,000 that they expected. Look, this is heading in a downward direction, the way that they provide the statistics, and you do have bumps along the way that actually increase, but we'll see, because it's very difficult to be able to maneuver in a scenario where most of the statistics hide the actual valid information. So we try to get it from alternative sources, and that's proven to be difficult, there's no doubt. UK faces the worst slump in 300 years, as there's apparently going to be some spending that will be cut. I don't know if that's actually going to happen. We'll see. But what I have noted over the years for the UK is that there is certainly weakness there. It is prevailing. You look at areas like London, and it's just not a good sign when it's all coming really to a head at this point. It's a problem when the UK's best trading partners, when you have all the other European nations suffering so drastically, of course, that's going to have an impact on the UK directly. I should have put this article, in connection with the other one that I showed you. BMO and CIBC extend work from home to April as Canada cases surge. What they believe here is that they are going to have to stay home. The downtown core filled with bank after bank after bank, and insurance company and PwC and all these different companies that generally work together physically going into the buildings no longer are there. And you've got Tower tower after tower after tower, and all in between these are all these little shops, and you go down and all these little shops, and beneath here you have a path. Okay, this path is miles or kilometers long, and it's got store after store after store after store under here. I can't remember the number, but it's something ridiculous, like 75 kilometers of store that or path, I should say, that are under here, and it's just store after store after store. It's a city underground in Toronto, and this here employs a lot of people. And in that situation where nobody is here in these buildings until April, it's going to be over a year, what do you think happens to all these businesses down underground? Left for dead twice, Radio Shack gets another shot online. I thought it was interesting because if anybody knows Tai Lopez and his partner that probably does all the work actually went in and bought this company among others, and I don't know what the plan is, but I'll just tell you from what I'm aware is that on many of their products, Radio Shack products, there is an extremely high margin. You're talking about 95% plus when we look at batteries and wires and adapters and so on. But the truth of the matter is, people today may not be looking for that kind of stuff anymore. It's more of a hobbyist store, and these little things might not be what people want. I don't know. We'll see. I just thought it was interesting. Wanted to put it here. Giving closed movie theaters a second act. Essentially, they're just going through some examples of different movie theaters, what they have done, redoing the spaces, and trying to use that to something that might bring people in. But in general, I just think there is too much of everything out there, and it needs to come back down to earth. I talked about this in a previous video not that long ago. I said that this was very important to watch it. Take a look. China Blacklist strands more than 50 Australia coal cargoes. The 5.7 million tons of coal is worth more than $500 million. An estimated 1,000 seafarers are manning the bulk carriers. Big news here as these two countries are going back and forth at a time that they really need to be partnered up on what they are importing and exporting. That's always a good thing, to be in business together, to do deals together. You have something I want, I have something you want, and of course we make it work. But this isn't a good thing, especially at this time. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn how to sell stuff online, I'm talking about e-commerce. You can do so for free at my website, theamazongps.com. If you want to know about the financial system from top to bottom, A to Z, everything is contained in these two books. Check them out at the link in the description if you want the audiobook instead, themoneygps.com. Wait a second. Don't go anywhere. Did you watch this video? You definitely want to take a look. Click on it. I will see you there.